Australia's GDP grew by 0.7% over the June quarter. Let's bring you immediate analysis. Our business editor, Ross Greenwood, has been across all those details for us. Ross, it is slightly better, isn't it, than expected, but it's still pretty soft, isn't it, after the last quarter?
Well, it's certainly soft, and part of the reason for that is that Australia had 29 days in lockdown during this period of time. So remember, this is 3 months going into June. The annual growth rate after last year was so bad because of lockdowns right across the country is quite phenomenal. So annual growth is 9.6%, as you can see here. Remember also that those forecasts of quarterly growth were between, originally at one stage even at -0.1, but they were revised upwards to 0.1 to 1.2. So it's come in at the higher end of that, so better than expected. But what it's really showing, Ash, here is the incredible strength of Australia's economy. And this is a reason why you'll hear the Treasurer Josh Frydenberg really urging businesses to ready themselves to reopen once vaccination rates get to this 80% mark. And the key here is Australians are prepared to spend. So the rebounds that we've seen are really very much anticipated right now. It's one of these points whereby, even though we know that this current quarter we're in, the September quarter, which has just ended, is going to be very soft. Australia will be going backwards. The sooner Australia is out of the lockdowns, the sooner our economy starts to rebound and go forward at these very rapid rates. And that's the key that's coming out of both the New South Wales Premier Gladys Berejiklian and also the Treasurer Josh Frydenberg today.
So, Ross, are we using the R word? Are we going into recession?
Well, that's hard to say. It depends on when we come out of the lockdowns right now in New South Wales and Victoria. You know, these are the strongest economies. These are the big employers. And so what you've really got is that while businesses close, while people are not employed, they're not confident to spend. They're also dipping into their savings. We saw that out of these numbers today. But as soon as Australia comes out, the rebound will be there. The demand for travel, the demand for cars, the demand for housing is very much embedded in the numbers we've seen today. Even public infrastructure being spent on by the government, fixing up roads, all of this is adding to Australia's economy. That's the reason why the June quarter was going forward at a fairly rapid clip, not going backwards, and notwithstanding September will go backwards as soon as the doors open in the December quarter. In other words, any time from now on until the end of the year, that's the time you'll see the rapid improvement. And that is why I would suggest the government even now would be confident of not going into technical recession, which is 2 consecutive quarters of negative growth of the economy.
Ross, is it clear just how much lockdowns have really impacted growth?
Well, yeah, they really have. You can see any time there is a lockdown, people just simply stop spending. So one chart that's out there today is probably you have a look at the national savings rate, the household savings rate. Now, that savings rate has come down from very, very high levels, right now sitting around about the 9.7% mark. It had been previously at 11.6%, then down to 12.2% prior to that. But you can see at one stage it got up over 20%. Now, what happens is that while you don't have JobKeeper, then Australians tend to spend their own savings if they don't have, if you like, the money coming through the door. And so right now, confidence also comes into this. When people go out and buy new houses, when they buy new cars, they dip into their savings. And so that's what you start to see. If you don't have the lockdowns, you have people confident to spend, and that's a pretty important point.